Hello and welcome to this July 30th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are taking a look at Research in Motion, ticker symbol RIMM. This is about a $31 billion technology company. Mostly famous for the BlackBerry. Taking a look at the chart here, you can see that we've had a series of failures on Research in Motion since we topped back in late March. You can see the stock ran up in early March, put in a high up above $75, came down, tested its 20-day, and on the next move up, when it had a false breakout here, you can see the tail trying to take out the prior high candle bodies. It failed to do so, closing back down beneath that key resistance level, and on that failure you can see that the MACD had already rolled over, so it was starting to lose momentum. Since that time, Research in Motion has been a property of the bears. The bulls have had very little to cheer about over the course of the last 4 months, and it's continuing so far. On the gap down back in early April, you can see we rallied back, went right up to the top of gap resistance here, put in that inverted hammer, failed, and then came back over. We tried it again in the latter part of April, trying to get through gap resistance, failed once again. So you can see a theme here with these red arrows. On the next move down, you can see we actually had another gap down toward the middle part of May, came back up, and on 2 or 3 occasions tried to get back through that gap resistance, couldn't do it, and then we had a final gap. Now on this gap down is a pretty big gap down, very heavy volume. We took out the prior low in early June of about 56.50, and you can see after gapping down, we came back up. We tested this area once about 2 or 3 weeks ago, went back down and came back up and tried it again today, and with this move to the upside, failed not only at this price resistance level but also at the 50-day moving average. This was the first test of the 50-day moving average since back at the end of April, early May. So it looks like Research in Motion at least is up against a key pivotal area on its chart, and it could break out. If it does, you want to be careful and maybe cover any short position, but we like a short position at this level. It's had a pattern, a history of going up to key resistance, failing, and then moving lower again, and until that pattern changes, I would stick with the short side. Now if we get a big volume breakout to the upside through the 50-day moving average, we'd have to respect that, and of course, like I said, move to the sidelines with any short position. But in the meantime, in the near term, we are looking at this as a possible short candidate. Looking at the RSI over the last 4 months, you can see every time Research in Motion has gotten to about the 50-55 level since early April, it has struggled, and we're up at about 52 right now. And it tried to make that breakout on Thursday, failed, and came back down and closed. Actually printed a doji, although I wouldn't put a whole lot of stock into that doji because it really wasn't off of an uptrend. We've been going sideways on Research in Motion really for the last couple of weeks. But nonetheless, any kind of a failure like this, especially with heavy volume at a major resistance level, shouldn't be ignored. So Research in Motion in the near term looks like a potential short candidate. Again, if it breaks above about $56.50, $57, especially on a closing basis, and volume picks up, I'd be careful. Otherwise, I think this one's got a shot to move back down to about 52.5 in the near term. And if it loses 52.5 support, there's really nothing else until we get back down near those early July lows around 47.5. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.